Okay, so hello everyone, my name is Salim and welcome to the mini markets breakdown, live breakdown analysis. And what we're going to be doing here is we're going to be reviewing how the previous weekly candle played out, and then we can plan for the new weekly candle ahead as well. So I just want to make sure everyone can hear me clearly first before we go ahead. So if you could just put a comment on the comment below, that would be really appreciated. Okay, so what we're gonna do first here is we're gonna have to, what we prefer to do is first look at how the overall time frame is looking on GBPJPY. So the first thing we're gonna do here is we're gonna look at the monthly. So far so today is the 17th of December 2023, and so far the monthly is bearish. The monthly still respecting the previous monthly high. The monthly broke below this recent monthly support area and trading below this level. So it looks like we could potentially see a monthly resistance to be formed around 186,890, or let's say 187 as well. So now dropping down to the weekly time frame, and the last weekly candle managed to close bearish below a strong weekly support. So now what we can see, the first thing I can see at this level here is a price formed a support on weekly time frame around 183.90, let's say 180.400, and then after that we didn't have any candle breaking below this weekly support. We've had a rejection. We had this weekly candle breaking below this weekly support, but then straight after that we've had a retracement and closing above this weekly support. And then after that as well, we can clearly see how price is respecting this weekly support and forming a support above that level. And what's interesting as well, within the previous weekly candle to the last one, we've had a weekly candle breaking below this weekly support area, but then retraced and closed above this support as well. And then finally, the last weekly candle managed to close bearish below the weekly support around 180.500. Now, since this weekly candle's closing bearish, now that means we could potentially see a continuation to the downside, knowing we've had multiple candles failing to close below this weekly support. The only thing is we need some sort of a confirmation based on a daily. So in order to see a swift move down, to see, let's say, a wick fill of this rejection wick, a wick fill of this one, and then potentially we can see we have a clean weekly candle on the left to mirror. Ideally is to see the current weekly candle to form a top wick, reject, break its own low, and then continue bearish. Now, the way that's going to look like on a daily, ideally is to see a retracement on a daily, forming a resistance either on a daily time frame or forming a resistance on the 4-hour time frame. So now, obviously, we can see the weekly candle closed bearish, but the only thing we can see with this weekly candle is it closed small bearish, still closing below this weekly support. But let's have a look. So when we measure the body of the candle, that's roughly around 152 pip range. But then when you measure the rejection to the upside, that's roughly around 263 pip range. The wick to the downside, I wouldn't really call that a rejection. I would just say this is a wick to potentially could get filled later on. And now dropping down to the daily. The daily candle on Friday managed to close bearish. And we have anticipated on Thursday last week that we could potentially see maybe like some sort of a consolidation to be happening on a daily candle for Friday. As we can see, price managed to close below this weekly support, and price formed a resistance around 181,690, closing just within this week the daily support formed on Thursday last week. So now what we're going to do here is we're going to break down the chart from the daily to the 4-hour, the hourly, the 30-minute and the 50-minute time frame. So the first thing we're going to do here is we're going to drop down to the 4-hour time frame and zooming in. And the first thing we can see, actually, before we do that, we're going to put a line to where the daily support that was formed on Thursday and the daily resistance formed on Friday last week. So dropping down to the 4-hour time frame to identify the no trade zone. This is how we're going to do it. So basically you need to identify the most recent 4-hour support, the most recent 4-hour resistance, dropping down to the hourly, the 30-minute and the 50-minute time frame. And then from there, you can decide where you think it would be appropriate to have a no trade zone. So the first thing we can see here on the 4-hour time frame, we can clearly see we have this recent 4-hour support around 179,950. We can see the most recent 4-hour resistance formed around 180,470. Drop it down to the hourly time frame, and on the 4-hour time frame, this looks clean. But the hourly time frame, we have some sort of a range on the left where price have been forming candles side by side on the hourly time frame. So what we're going to do here is we're going to keep that level of support on the hourly, keep the level of support, a resistance on the hourly time frame as well. Zooming in and dropping down to the 30-minute time frame, and what do we see? We have a same level of support and resistance. But then we're looking on the 50-minute time frame, we can make a slight adjustment based on this 50-minute time frame. So we are adjusting the level of support to 179,890. The level of resistance remains the same. So now what we're going to do is, the question is this going to be a decent no trade zone? The first thing I like to do is measure the potential no trade zone, and that's roughly measuring around 56 pip range, and then that's 260, 470. Now the big question is, would it be ideal to have potential buys above 180, 470, or would it be good to have a slight adjustment based on this resistance on the left? Now, knowing that the Asian session will be opening soon and new weekly candles forming as well, we might see low volume. So there is a probability for price to range within this range, knowing this is a 4-hour support and a 4-hour resistance, and knowing that the daily has formed some sort of a support on Thursday, and the daily candle on Friday managed to close just within that daily support as well. So I would say potential buys, we could look for buys as price break and close above 180,470. And potential sells. Now since the daily closed bearish, what I would do is maybe, since the daily candle for Friday closed bearish, maybe ideally is to look for sales as price break and close below the previous daily low, which is, let's say, 179,820. And in that way, this is going to allow us enough range to consolidate before breaking out the range. Now, the first question we have is, I would slow more room for consolidation. So, yes, I mean, the only thing goes, so if you were looking to extend for potential buys above, let's say, obviously we're talking on price action, you know, on scalping, on like day trading. So if you were looking for buys above a next level of support of resistance, you have this 4-hour resistance, and this is a big range. So this could be a potential target for us. But then when you drop down to the hourly, that's where it looks really, really messy. So for example, if you were looking for buys above 180,900, and the next level of resistance, you have it at 181,100, and this is a really small range. Not only that, this is a tight range, and this is a consolidation zone within the hourly time frame. And then let's say, for example, let's say we're looking for buys above 180. Okay, so let's say we're looking for buys above 180,900, and then when you drop down to the 5-minute time frame, this becomes a range really. So ideally is, in my opinion, I think potential buys could be above 180,470. So the only thing I want to say here is, Once price break above this level, you really want to be picky on whether you want to execute on this idea or not, because you want to basically take those analyses and you want to make sure that there is enough volume in the session. For example, there are times where you see price breaking out of this resistance, and then you see you think, okay, so the move is happening, but then all of a sudden price starts to retrace and going back into the range again. So this happens a lot more often during the Asian session, and it happens also at the market open. So I'd say potential buys above 180.470, potential sells could be below 179.820, and this is going to be the no trade zone. I'd say this is a decent range, and we're just going to identify this with this rectangle. And now to look for potential buys. So the first thing we can see here, just a quick review. So the weekly closed bearish. The weekly confirmed closing below this weekly support. So now the next level we have, if the new weekly candle forms a top wick and then starts to retrace and breaks its own low, there is a higher probability for price to fill those rejection wicks, knowing we have clean candle on the left on a weekly time frame. So there is that probability for that kind of basically for this idea to happen. So the idea here is maybe to see another retest based on a daily time frame to retest this daily resistance formed on Friday. So if price go into, so the idea here is to see the weekly candle to retrace, maybe retest this weekly resistance, and that will allow the new weekly candle to retrace and retest this weekly area, which is some sort of a consolidation zone on a weekly time frame, before breaking below this level and continuing bearish. So now to break down the chart and zooming in, and the first target we can see is we have this daily resistance formed at 181.700. Dropping down to the 4-hour time frame, we have this recent 4-hour resistance around 181.270. Let's have a look. So that's actually a decent range, 78 pip range. But then when you drop down to the hourly time frame, this becomes a messy area on the hourly. So what we're going to do here is we're going to adjust this level to this hourly resistance around 180.920. Drop it down to the 30-minute time frame. We have a 30-minute resistance, but this is a consolidation area on the 30-minute time frame. And looking on the 50-minute time frame, we have a same level of resistance as well. So personally, I would say the first target for buys could potentially be this hourly resistance around 180.920, simply because we don't know whether price is going to respect this resistance, knowing we have a 30-minute consolidation zone at this level. So I'd say the first target would be 180.920, targeting this hourly resistance. The second target for buys, and obviously that's planned for Monday. The second target we have is a daily resistance that was formed around 181.750. Drop it down to the 4-hour time frame, and what we can see here is we have another 4-hour resistance around 181.290. Now let's put a line to where this level is. And that's 34-35 pip range. Let's have a look on the hourly time frame and see if we can adjust anything. So you can clearly see we have again an hourly resistance. Looking at the 30-minute time frame, and this becomes a really messy area, and this is the reason to why I was looking for the first target at this hourly resistance and not the 4-hour resistance. Now looking at the 15-minute time frame, again it looks really messy. So the idea here is to look for a potential retest of this 4-hour resistance at 181.300, targeting this 4-hour resistance. But again, based on a weekly, there is a probability for the current weekly candle to retrace and tap, let's say, this daily resistance to allow the new weekly candle to form a top wick. Now to look for potential sells. I'm just going to remove this one. Now to look for potential sells, and going back to the weekly. Now since the weekly candle's closing bearish, and also the monthly candle is trading below this monthly body candles where the monthly formed a consolidation. So now the idea is to see a continuation to the downside. Maybe based on a monthly time frame, maybe we could see a retest of this previous monthly low formed around 177.970. The only question is, will we have enough volume for price to push down? Now when dropping down to the weekly time frame, the first thing we can see is we have the last weekly candle low that was formed around 178.330. Dropping down to the daily time frame, we have a daily rejection that was formed on Thursday, and then dropping down to the 4-hour time frame. Now we have this new 4-hour range. So this is a really small 4-hour range, obviously. So what we're going to do here is we're going to adjust this level to the most recent 4-hour support. That's around 179. And that's actually a decent range as well. But when we drop down to the hourly time frame, now we have a different story. So we can clearly see price have been forming a range within the hourly time frame. You can clearly see how these candles printing side by side, forming the highs. But then the only thing with these highs is the body of the candles closing small body candles. Now dropping down to the family time frame, same level of support. Looking at the 15-minute time frame, more likely will be the same level of support as well. So now the question is, our target, would that be the 4-hour support, or should we focus on the previous 1-hour resistance? In my opinion, maybe just to play it safe, because we don't know whether the weekly is going to consolidate, knowing the last weekly candle closed small bearish candle compared to the rejection to the upside, and knowing also we have these rejections on the left, or we could possibly see a decent retest of this 4-hour support. Now, I would say the first target for sales could potentially be 179.300, targeting the previous 1-hour resistance. So you can clearly see how price formed the resistance. You can see how, dropping down to the family time frame, you can see how these candles printing side by side. So as price break below this level, there is a probability to see a rejection once price approach these consolidation zone on the hourly time frame. And then the second target for sales, now zooming out. Again, what we're going to do is we're going to put a line to where the previous weekly candle was formed around 178.320. As 310.320, dropping down to the daily time frame. We have a daily rejection formed on Thursday last week. Dropping down to the 4-hour time frame, we have a 4-hour support around 178.750. Looking at the hourly time frame, now we have this bottom hourly support around 178.660. And then zooming in again and dropping down to the 30-minute time frame, and we have this range. Now, in my opinion, yes, we could have a second target for sales at 178.660, but there could be a continuation to the downside, knowing we have a daily resistance formed on Friday, the weekly candle closed bearish below this weekly support area, and also the monthly candle being bearish. So there could be a potential retest of this previous weekly low, which is also the daily rejection formed on Thursday. So if you do have any questions related to GBPJPY, I'd rather just get some questions now before we move into gold. Okay, so yeah, thank you very much. Thank you. Yeah, so any questions related to this, just please make sure to ask. There's no problem. We can always go back into it. But yeah, the reason why I wasn't really specifically looking for big targets, the first reason is the weekly candle is just about to open. We don't know whether we're going to get a decent volume, knowing obviously we approaching Christmas time, Christmas holidays. So volume starts to reduce, and also we starts to see high volatility as well. So ideally is to be decent with the targets. It's easy to say, for example, so I'm looking for, so we are looking at 181.700 as the max zone area for GG for the week. Yeah, to be honest, yeah, like, so 181.700. Like, roughly, I would say that would be a decent target. If to the push for the weekly candle to form a top wick, maybe you could see as much as retesting this daily resistance, but that would be a decent push. and that will allow the new weekly candle to reject this area. In my opinion, I think we could see a retest of this daily resistance before the continuation to the downside. But again, if we've had some sort of a strong pullback on a weekly time frame, we could see this as a target for daily resistance, knowing we have a previous daily support on the left, and also this could become a rejection, knowing we've had two weekly rejection formed previously. So the only reason why I didn't look as far as this is because of how the weekly candle closed bearish, and how we could potentially see low volume as well. But yeah, like the idea here is to have decent targets, realistic targets. You don't want to have a big target where, you exceed your, let's say, you take profits to the point where, let's say, for example, we could easily say, okay, for our first target would be this daily resistance, and this is a decent range, but price could easily not even reach this daily resistance. It could easily tap into a 4-hour resistance and starts to retrace. So it's ideally to play basically safe. Yeah, definitely. So yeah, and now going back to XAUUSD. So now a quick review on the on gold. So currently, obviously, the weeklies formed, the monthly candles forming a huge rejection to the upside, and to be honest, the push to the upside that was expected, because obviously price was tapping an all-time high, and we've had no recent price action. This was a historical high, so we didn't know where price was going to let's say stop. So these retracements are really good, because now at least once gold form a support on a monthly time frame, and then there is an area we could look for a retest to the upside. Now so far what we can see is the monthly candles trading bearish, and the monthly candles form the rejection to the upside, dropping down to the weekly time frame. And actually this is something interesting as well. It's interesting how the weekly candles retraced and tapped into this previous monthly resistance, but now price is retracing back to almost where the monthly candle started. DBI, call it day. Yes, to be honest, like, it's always to, when you have your first TP, just close it. If you feel like, for example, let's say if you think there is a higher probability for price to continue to a certain direction, then yes, why not? You can leave your runners. Runners shouldn't be anything large. You want to secure most of your position, and those runners is just a tester to see whether your second target was as accurate as you did have on your analysis. But yeah, that's a good way to approach the market. So now looking at the monthly. So interesting how the monthly candle tapped into the monthly resistance formed back on the that was formed in May 2023, and now the monthly is retracing, now dropping down to the weekly time frame. And obviously this retracement happened within the FOMC meeting last week, and that's why we've seen gold moving up, and that's why we've seen also this strong daily candle closing bullish. So now looking at the weekly time frame, and the weekly candle closed small bullish, forming weekly support around 2004, and dropping down to the daily time frame. And actually this is something that we've mentioned as well. I've mentioned on Thursday how we could potentially see a weekly support to be formed, and then based on a daily to see a daily resistance. The confirmation I've had to see a daily resistance or sells to play out more likely than buys, and I've actually explained that on the live stream we've had on Thursday night last week, is because of how price pushed up. This initial push that was obviously related to the FOMC statement and potential rate hike on the US dollar for 2024, and then the confirmation that we've had for those potential sells is where the daily candle on Thursday closed weak bullish, formed a rejection to the upside. Now the whole idea we've had for these sells is price started to consolidate on the 4-hour time frame. So the only thing we were waiting for here is to see price breaking below 2030, because this was a range on the 4-hour time frame. And then eventually, so this is literally exactly how we've had it. We were looking for sells below 2030. We were looking for potential buys above 2043. And as we can see, price consolidated within this level. As we can see, once price broke below the 2030 level, we've had a nice clean move down. And one of the targets as well we've had was the previous weekly support, daily support that was formed around 2018, and that was just an idea basically. So as we can see, the daily candle for Friday closed bearish, forming a daily resistance around 2036 and closing just within the daily support formed back on the 7th of December 2023. So now obviously, since the weekly candles closed weak bullish, I'd call it weak bullish because of how the body of the candles played out, and because of the daily candle for Friday closed bearish, forming daily resistance. Potentially, I'm just ignoring this daily candle out of this range, because obviously this push up was due to the FOMC meeting. So the idea here now is to see a continuation to the downside. Now, based on a daily time frame, I would say this is really clean, because when you're looking at the weekly, the only thing what we're hoping for, even though the weekly support has been formed, based on a daily, there is a good confirmation to see a retest of, let's say, this daily support, because we've had this move up due to the FOMC meeting. And the only thing now is, what would be good is to see the weekly candle retracing, forming a top wick, and that top wick could go as far as, let's say, 2036. Let's put 2036 on a line here. And then when you drop down to the daily, that was a daily resistance formed on Friday. So we're talking like basically price retracing and retesting a certain area. So the retest could be potentially a daily resistance, or it could be a 4-hour resistance formed around 2043. And now to break down the chart and drop it down to the daily time frame, the daily candle closed bearish. Now what we can see, we have a daily resistance formed around 2035,500. Drop it down to the 4-hour time frame, and here's the thing. So you can see how a weak 4-hour support was formed on Friday around 2018,900. And we can see how this 4-hour candle is already breaking below, and it looks like it's almost breaking below the previous daily low. Now, what we're going to do here is we're going to go step by step. So the first thing I can see is I can see this 4-hour low, and I can see this 4-hour high. The reason why I'm not focusing on the body is because of the candle being too small, the body of the candle being too small. Now zooming in and dropping down to the hourly time frame. Again, this is a really small range. So let's have a look on 30-minute time frame. Yes, we do have some sort of a range on the 30-minute time frame, and that would be the same on the 15-minute time frame. But again, this is a really small price action. So what I like to do sometimes is I would look at the previous price action. Do I see anything interesting on a monthly? No. Do I see anything interesting on a weekly here? Yes, I see this previous weekly resistance, but this weekly resistance is above where, or exactly on where price is trading at the moment. So we need to see something below that level. So dropping down to the daily time frame, do I see anything interesting here? Not really. But then when you drop down to the 4-hour time frame, we can see where this 4-hour candle started around 2013,700. Now this is the first point of interest on where I'm going to start doing my adjustment on the no trade zone. So now dropping down to the hourly time frame, again nothing to see really apart from clean traffic. But since price broke above this level, or where the hourly candle started, this could be our point or on where we could look for potential sells. And also when you look at the hourly time frame, we've had the strong hourly candle closing bullish. So there is a probability once price break below this hourly low, there is a high probability for price to mirror this clean traffic on the left. Now zooming in and dropping down to the 30-minute time frame. Again, nothing to see on the left. Let's have a look at the 50-minute time frame. The first thing we can see is, again, probably the same. Actually, interesting. We have a 50-minute support. Now you can see how we've identified, we started from a 4-hour open, dropping down to the hourly, nothing to see. 30-minute time frame, nothing to see. Going back to recent price action, nothing to see. But then the 15-minute time frame, we can identify that we've had a 15-minute support formed around 2013,700. Now this could be a potential target for, let's say, an area where price could break below to look for sells and for potential buys. Now we're looking at the potential buys. Now we have a 30-minute resistance at this level, And then we've also had a 15-minute resistance around 200. Now this could be a decent no trade zone, because the good thing about this range here is this is where price is consolidating, recent price action obviously. And then when you drop down to, when you look at the 4-hour time frame, this is where the 4-hour candle started pushing up. Below this level, we have a clean candle on the 4-hour time frame. Below that level, we have a clean candle on the hourly time frame. So now to look for potential buys. Now, before looking at the daily, let's have a look again on a monthly. So, since monthly formed the rejection, we're not really going to see, like, we're not looking for a retest of this high already, because obviously today is the 17th of December. We're approaching Christmas holidays. There is a possibility that we'll be reducing volume, so we might not see basically this retest in here. So the idea is to see potential monthly resistance to be formed around 42,400. Now dropping down to the weekly. The weekly candle closed week bullish. The first thing we can take here is we have the weekly high formed around 2047,900, let's say 2048. Dropping down to the daily time frame. Now this is where the daily candle formed the rejection on Thursday and failed to be retested on Friday. And then zooming in, and we have this recent daily resistance formed around 2035,900. Now dropping down to the 4-hour time frame, and now where it becomes really interesting. Now, if you remember on the analysis posted on Thursday, we were looking for potential sells below 2030. We can clearly see we have this previous 4-hour support formed around 2031. Now the probability for price to retrace and retest this previous 4-hour support becomes really high. And this is how we can anticipate, let's say, okay, so we're going to go step by step, but I'm just going to explain something on how sometimes I could look for, let's say, confirmation to know, okay, so that's it. The weekly formed a top wick, and now we're going to start to see a retracement. We're going to first look for targets, and then we're going to break that down. So we have the most recent 4-hour support, previous 4-hour support around 2031, but we need to see what's going on within these wicks on the left. Now dropping down to the hourly time frame, you can clearly see how price is lining up on the hourly time frame. You can see this decent hourly candle pushed bearish below this hourly support, dropping down to the 30-minute time frame. Now we have this previous 30-minute support around 2029,500. We're looking at a 15-minute time frame. We have this 15-minute support around 2028,400. Now the question is, are we going to have a first target at the 15-minute support, or are we going to see a target at the 2030, which is the hourly support and the 4-hour previous support as well? In my opinion, to see a decent retest, I would have it at the previous 4-hour support formed around 2030,200, which lines up with this previous 1-hour support area. Because the idea here is to see a pullback, because once price started to consolidate at this level, then we've had candle closing below this consolidation zone. Now, the more price move away from that recent 1-hour support, the higher probability for price to retrace and retest the broken support area. So this is the idea of having a retest of the previous 4-hour support. So for price basically to retest that broken 4-hour support, which is an area where price consolidated for quite some times. Now, the first target for buys could potentially be 2030 targeting the previous 4-hour support. The second target for buys, now looking at the daily again. So since the daily formed the resistance, we could potentially see another retest of this daily resistance, but let's see if we can adjust anything on the 4-hour time frame or the hourly time frame. So dropping down to the 4-hour time frame, we do have the previous 4-hour support, which is a support that was formed within the range. And then when looking at the hourly time frame, we have this 1-hour resistance around 2034,400. Now the idea here is maybe to have a target at 2035,100 to target this 1-hour resistance. And that could be also a retest of the daily resistance formed on Friday. So now to look for potential sells, and again here's the idea. So the idea is to see retracement on the daily to form a top wick. Once price break above this level, we could see clean traffic on the left, mirror on the left. So now Once we have that confirmation, that doesn't mean that's it, we're going to see sells. We need volume as well. So sometimes you might see price retracing, forming a top wick on a daily time frame, on a daily candle, and then you see price breaking below this level, and you think, okay, so that's it, price is going to sell. We have clean traffic on the left, we have all the confirmations. But then what happens? You start to see price ranging again on this level. So this could be due to lack of volume. So you have to know, you have to basically identify where there could be a potential volume or non-volume time. And now to look for potential sells, we go back to the monthly. So the monthly is retracing. Now, if we did see, let's say, a decent volume within the new weekly candle, maybe we could see a retest of this previous monthly resistance around 1986.800. And to be honest, that's really not far. Dropping down to the weekly time frame, and also I believe that will allow for having a target at the monthly resistance, which is 1986.800. That will allow for price to correct the whole move that we've had on FOMC statement on on Wednesday last week. So this becomes, let's say, the whole idea about sells is to see a correction of this bullish move that we've had on Wednesday last week during the FOMC, and that would be also a retest of the previous monthly resistance, allowing for the current monthly candle to close bearish, forming resistance. Now see how everything's playing like hand to hand, basically lining up everything starts to connect. So now what we need to do is we need to identify those levels. Dropping down to the weekly time frame, and what do we see? We have a weekly support that was formed around 2003 300. Dropping down to the daily time frame, we have a daily resistance around 2007. Zooming in and dropping down to the 4-hour time frame. Now that's where it becomes really tricky. Now you have clean traffic on the left. In order to see price moving down, you need volume. So the first thing we can identify here, not only this previous daily resistance, but also the 4-hour resistance formed around 20.07.100. Despite knowing we have clean traffic on the left, we still have to pay attention to where price formed a resistance previously, because there is a probability to see price breaking below this level, tapping into the 2007 area, and it starts to retrace, and then you question yourself, how come, like, price broke below this level, we have clean traffic on the left, why price didn't continue bearish? Now that doesn't mean price is not wanting to go down, but that means maybe price is reacting to this previous 4-hour resistance, retracing, and then retesting that new low to continue bearish. So that could be just a pullback basically. So dropping down to the hourly time frame, and what do we see here? We have again a previous 1-hour resistance on the left. Looking at the 5-minute time frame, still clean traffic on the left. Looking at the 15-minute time frame, we have this 15-minute resistance as well. So I would say potential, the first target for sells, we could have it at 2007-100, targeting the 4-hour resistance formed on the 11th of December 2023. Our second target for sells, now again we're going to identify, and the target for the 1986, obviously that was based on weekly time frames to see the retest. Okay, so the second target for sells, now dropping down to the daily time frame, and what do we see? We have a previous daily support formed around 1990-100. The only problem with this, yes, we have clean traffic on the left, but we've had a daily candle closing week bearish. Now what we need to do is, our job is to identify what has happened within this rejection to the upside. Now what we're going to do, we're going to drop down to the 4-hour time frame, and we see a 4-hour resistance has been formed. Price tapped into this 4-hour resistance, retraced, left the rejection, and starts to consolidate again. Now if price tapped into this level, this becomes an area of an interest. So what we're going to do, we're going to adjust this level to 1996.500, dropping down to the hourly time frame, and looking on the left, that becomes an hourly resistance. Looking at the 30-minute time frame as well, let's have a look again. That becomes a level of resistance as well, and that's a rejection. I would say the second target for sells could potentially be the 4-hour resistance formed at 1996.500, which also, that is a daily rejection that was formed on the 12th of December 2023. Now, if you do have any questions related to the breakdown that we've just done, just please put on the comments below, and I'll be happy to assist you further. Now, I know sometimes people would ask, okay, so you do have a daily resistance that has been formed, for example, and the next thing you can see is, okay, so for example, okay, so we have a daily resistance that has been formed at this level, and you can clearly see how price is failing to retest this strong daily candle that closed bearish. Now, you know, like the way I see trading is whenever price form some sort of a range, like those daily candles we can see, we have 1, 2, 3 daily candles here. This is not something that you've missed on. This is something that you could potentially participate on in the future, because the way I see it is, now let's say a month down the line, yes, price is retracing. Price formed a monthly rejection to the upside, a potential monthly resistance to be formed in December. We might see a continuation to the upside in 2024. Now, here's what we're going to see, okay? You might see a retracement. So now the weekly candles closing bullish. And this is, so like sometimes I like to picture in my head how price action is going to play out. So weekly support formed at this level. Price pushed up, retested this weekly resistance. The candle closed extremely bullish. The following one broke above the high. As it started to retrace, this would have been a good idea to look for potential sells, knowing that price is rejecting the upside. Now, yes, this is a little bit aggressive, but you can almost like anticipate those kind of moves. And what I mean by this is, let's say, yes, this is an aggressive way to look at, like, let's say, a reversal trade, but what we know here is this weekly candle. So this weekly candle closed bullish. this weekly candle broke above the most recent high, which is the all-time high, and formed a historical high. Now, as price starts to retrace and this weekly candle starts to break its own low, that's when you could potentially look for sells, knowing that price is forming a rejection to the upside, knowing that price needs to retrace. Okay, so now dropping down to the daily time frame, and the way I see, okay, so I do apologize, sometimes I think I go a little bit too far, but let me just show you something. Okay, a weekly support has been formed around 1938 500. Price retested this recent weekly resistance, formed a new high, a new weekly resistance formed at this level, and then now price retraced and formed a rejection to the upside. Now, with the last weekly candle closed, I would say weak bullish in my opinion. Now, a weak support has been formed on weekly time frame. Now, the next level we see is, look how the monthly candle's playing out so far. The monthly is forming a rejection. The weekly is forming a rejection. The daily formed the resistance. We have this huge candle closing bearish. This becomes a really good area to look at in future for potential buys. And what I mean for buys, maybe you could look for much bigger target than, like, let's say the average 60, 70, 80 pip range. So this becomes a really good potential area to trade where you can leave runners or we can increase in your risk. It all depends on how you view the market. Okay, so now this is how I view things. Since this weekly candle is closing weak bullish, now there is a probability for price to retest, maybe, if not this weekly support, maybe to retest this previous weekly resistance. Now, the 1965 area becomes really interesting because when you put a line at this level, what do you see? Weekly support formed in this level. Price failed to continue bearish. And then weekly resistance formed at this level. Another weekly resistance formed at this level. Now, looking on a monthly time frame, what do we see? Monthly resistance formed at this level. Now this becomes an interesting area to have it as targets. Now, see why I didn't say a weekly support at this level at 1937. Yes, that would look like a nice target. Yes, that could potentially happen, but also that could potentially not happen. Why? Because price might react to this monthly resistance formed back in that was August 2023. And then also this is a major resistance at this level and also a recent weekly support on this level as well. And that's how I view it. And then obviously as price formed a support on a weekly time frame, now you start to piece everything together. Is your monthly on your favor, bullish? Is the weekly bullish? Now here's how you look at it. A weekly formed the support, a price retraced. Now there is a probability for price to continue bullish, knowing that the monthly is bullish, knowing that the monthly formed the bottom wick, and then knowing that you need to find confirmations based on a daily time frame. So this is how I sometimes view the market. I go a little bit too far on my own imagination based on price action, but I always pay attention. Yes, it is good to pay attention to the most recent price action, which is obviously in that case we have the weekly support formed around 1938 level, but also there is a probability for price to reject that level because of this weekly resistance. And to be honest, in my opinion, this is a prime example because this weekly candle kind of tapped into this previous weekly resistance. This weekly candle tapped into almost this monthly resistance. So it kind of makes sense, I think, on the high time frame. And then this is how I view it. As price, break above this daily resistance, knowing that price is closing above this weekly bullish candle, you start to like anticipate. So since price formed a daily resistance and price failed to continue bullish, once that candle closes above this level, we have a decent target for potential buys, and that could become a retest area. Yeah, exactly. Yeah, so like every time there's a clean move, is a missed opportunity for another day. Exactly. We've all missed, good opportunities. You wait for price to form, let's say, a consolidation, and especially when it forms those ranges on a daily time frame, and you're waiting for it, and then the 4 hour time frame is consolidating, and then all of a sudden, price break out of this range. a breakout of the range, and let's say that could potentially line up with, for example, let's say that could line up with a potential upcoming FOMC. You say, okay, so that's interesting. Price is starting to range, yeah. Price is forming a range on the 4-hour time frame. In 3 days, we have NFP, for example. That makes sense. And yeah, that's how we, basically anticipate these moves on the high time frame. Now, the one thing I like to point out on GJ is, if anyone is really interested to start to look at the high time frame, the one thing I would say is keep an eye on how this monthly candle closes, because just imagine we've had 2 monthly rejections to the downside. So that was back in July 2023, and it was a rejection formed in October 2023. If this monthly candle closes above this monthly support, there is a higher probability for price to continue bullish at the new year, for example, obviously 2024 basically. So it will be very, very interesting to see this monthly candle closing. And again, we've already discussed the matter on gold. I think a decent monthly resistance is needed that will allow price to take a breather basically, and then retest those previous monthly resistance area, form a decent support on weekly or the daily, and then starts to see the continuation to the upside to line up with the rate hike, potential rate hike on obviously 2024. Any other questions? Okay, so so you've said the USD expected to weaken in coming months. Does that affect your gold analysis? To be honest, the analyses are always there to adjust, to review. You know, we're looking at like an all-time frame analysis. We're looking at the monthly, the weekly. You're also looking at how price is forming those rejections. You're looking at how a monthly resistance is forming as well. So, I mean, for price to pull back, that would make sense based on price action, based on technical analysis, because that will allow, since a new high is formed and a rejection, an all-time high, a historical high has been formed, there is a probability for price to retrace. Now, this is exactly what's happening. So it would be good to see that retracement on the high time frame form and establish a decent support that could be on the weekly, could be on a daily, if we're going to see that continuation straight away, you know, in January or February, or it could be maybe on a monthly time frame. But all we know is we have the most recent monthly support that has been formed is all the way down to 1847,700. So that was back in October 2023. So since that level, we've had a strong bullish momentum. We've had price retesting this strong monthly resistance. We've had gold breaking above multiple rejections on the left. And we've had gold also forming a new all-time high. Now, what we know is, obviously, it's like supply and demand, basically. Price is forming a new high. Price formed a rejection. Now, price needs to retrace to retest a certain levels. Now, this could be retested. Not saying that can't happen, but the probability is lower because that's a big range. In order to see that happening, something fundamentally has to basically happen, you know. But looking at like based on what we can see so far on price action, we can only talk on what's going on now, because, you know, if you were looking for gold, for example, Wednesday prior to the FOMC meeting, yeah, gold was trading. Let's go back on the daily. So gold, this is where, so at the time before the FOMC meeting, gold was trading around 1980. Because when you drop down to the 4-hour time frame, let's have a look. Okay, so you can see where price was ranging. Okay, and then all of a sudden, so gold was trading around 1980s, yeah. But then when you look on a weekly time frame, that would have made gold looking extremely bearish, the candle. Now we're looking on a monthly time frame, that candle would have been a decent bearish as well. So all of a sudden, after the FOMC meeting, you can clearly see how price continued bullish and how we've seen this strong daily candle closing bullish. But yeah, I hope that did answer your question. Yeah, so question is, how often do you do a YouTube analysis? So these analyses are very new. What I used to do is I used to post breakdown analysis starting from Sunday, Monday, Tuesday, Wednesday, Thursday, leading to Friday. And these used to be pre-recorded right after the new daily candle starts. But then we started thinking from the team management, we started to think of doing those live stream analysis, basically live stream, where we can break down the chart and people can ask questions. So these live stream breakdown analyses are hosted every Sunday and Thursday. So that will be 11 p.m. GMT. That will be 5 Eastern time. I'm looking to extend those days to, let's say, Sunday, Tuesday, and Thursday. But we just need to see a little bit more engagement with those live streams. That's probably my second week starting them. So we just need to see more activity within these live streams, and then I'll be looking to extend them more. And even if to be honest, if we see a lot more people interested in those live streams, I'd probably extend it to 4 or 5 days. It all depends on how many people are tuning in. Because obviously, when I'm doing these live streams, I don't want to keep the live stream going where there is no questions. We want to keep it nice and authentic. We want to keep the stream going. So questions are really, really important. So that interaction with the live chat, that is really, really important. So questions are really needed to keep it going. But yeah, for me personally, I do them daily. I post them daily. I used to post them daily. But I think doing them like this live stream, it really allows me to break down the chart properly. Because I used to get, let's say, for example, do GBPJPY within 5 minutes, XAUUSD within 5 minutes. But the only problem with that is I could easily extend it to, let's say, 10 to 12, 15 minutes. But is it going to be more fun for a viewer to watch? I don't think so, because I wanted to keep them compact so people can actually enjoy watching them. And then, you're not really taking, I would just want to give you an idea within 5 minutes. I don't want to take so much of your time. You're taking that idea within 5 minutes instead of 12 or 15 minutes. But those interaction with the live stream are way better than the pre-recorded videos, because then anyone can ask questions. Okay, so how come you've had this as a first target? How come you've had this as a second target? Then I can answer that question. One of the questions I used to receive a lot is sometimes the no trade zone. I used to have it, let's say 90 or 120 pip range on gold, but then the targets we're talking at like 40, 50 pip range. Yeah, like visually that didn't make sense, but when you look at the price action, you start to see why we're having it as a no trade zone. Because the thing is, if price is ranging within that big range, there is a probability that price will wick into that, let's say, for example, just to give an example here. So let's say price starts to range in here. If I was looking for target in here, let's say our target would have been this level, and our no trade zone is huge. How do I put this together? Okay, so the idea is price needs to, if price is ranging within 120 pip range, allow it to do so. If your next level of target is a previous 1 hour support and that 1 hour support looks decent, then yes, have that as a second target, as a first target. Just because this range, let's say you have a 90 pip range as a no trade zone, and then your potential first target as a 36 pip range, there is nothing wrong with that, in my opinion. In my opinion, that's actually a smart move, because you're playing it safe, because you don't know where the price is going to, let's say, tap into this level. For example, let's say you ignore that support around 2026, and then your target, you've had it at this 4 hour resistance. How disappointing would it be to wait for price to break out of that range, and only for price to tap into this wicks on the left and then starts to retrace? And then that's when you're more likely to start to over risk, over trade, revenging, and you're thinking, okay, so you know what, price is retested, definitely price is not going to go back in against my favor, and the price starts to retrace, stops you out. And then as soon as that candle closes, you say, okay, so since that high was formed, there is a higher probability for price to retrace and retest that high again. Again, what will happen? Price tap into this level, like reject again. So now price is telling you something. It doesn't like a certain level. So there's a reason why we've had this as a no trade zone. Salim, any idea of the GPY monetary policy statement on Tuesday and the Bank of Japan conference? Because on Forex Factory, I can see it as tentative time, no specific time. These events can move GJ. Okay, so yeah, to be honest, with the Bank of Japan, they do have time as attentive, but sometimes what they do is they have their rates released. I'd say maybe a couple of hours before. I would say 3 hours before London Open. Sometimes at I've noticed sometimes at 3:30 in the morning, sometimes at 4 o'clock in the morning. That's UK time. But it's really hard to tell. But what I've seen personally, those rates doesn't really affect as much because you always see a spike and then it just a retracement and price starts to consolidate and you don't really see any decent movement. So maybe if they start talking about, cutting on those negative rates, then maybe we could see an impact on GBPJPY. And that's where you're more likely to see, let's say, a breakout. And that breakout doesn't mean you missed out on a trade. Let's say price might break, for example, let's say price could break above this day. Okay, so let's say price retests this daily resistance, retrace, and you think, okay, the move's already happened. You might see that continuation at the London Open. So I wouldn't really look at it as missed trade. Just look on how you can take another entry, waiting for that resistance to form. If it was buys, wait for price to retrace, form a support, and then look for the continuation to the upside. Yes, I'm based in the UK. Yes. Yeah, because if you go back to all the interest rate review for the Japanese yen, you'll notice on every one of them, or the most recent ones, you'll notice there is no volume around that time. You don't really see any movements, or you might see a spike and then it retraces and it just corrects itself. I've noticed with the impact that we can see sometimes with the Japanese yen is when the Bank of Japan starts to talk about, let's say talking about, I've lost it. When they start talking about a potential, cut on rates, and in those negative rates, when talking about the deflation, but yeah, or maybe when actually I've noticed one thing, when there is market manipulation on prices, you might see decent moves. But again, you see huge spikes, you see spreads going crazy, and that's nothing to do with the broker. That's mainly to do with the volume that's going on in the market. So yes, yeah. And yeah, you're welcome anytime. You're welcome. Any questions, just fire up. I'm more than happy to answer any of the questions. Any questions that I'm not sure, then obviously I probably will answer them. I don't want to give any false information. I want to give you nothing but the knowledge I know myself. To be honest about prop firm, I don't really think anything. I've never looked into these kind of stuff. I'm mainly focused on GBPJPY, XAUUSD. I'm focused on the charts. I'm focused on how price is moving. I'm focused on how daily ranges are playing. As a trader, yes, you don't have to spend a lot of time looking at the charts, but the way you can analyze the chart is measure how those daily candles are forming, because sometimes you forget. For example, if we go back as far as 2020, and I actually remember this, I remember on Roger's live stream, targets we used to have, we're talking 20 pip range. That was a decent target. 25 pip range on GJ. Let's have a look on a monthly, going back to, I believe that was around July. We're going as far down as 140, and that was when the Brexit happened. That's when second lockdown started as well. So for example, 140, was it 140, 137? Let's have a look. We have the 9th 2020. Yes, you can see how Okay, so when you measure this monthly candle, that's roughly around 430 pip range. Okay, so now let's have a look again, breaking it down to the weekly. And weekly. Okay, so 2019. Yeah, so you can clearly see how these weekly candles used to form. I mean, that's just one weekly candle, and that's 200 pip range, 130 pip range. That's just one weekly candle. But then when you drop down to the daily, let's have a look at the daily candles back in 2020. That was a decent one. But most of them you can clearly see how there were small daily candles. For example, that was roughly around 87 pip range, 74 pip range, 42 pip range. That was a decent one, but that was a retracement. And then again, you can see how small these daily candles. So within these daily candles, the target we were looking for buys and sells, we're talking 20 to 25 pip range. But now, when you look at the targets we have on the hourly time frame, sometimes it can vary between 40 to 50 pip range, which that used to be almost half of the daily candle that was printed back in 2020. So you can clearly see the increase in volume when it comes to price action. So that's something that you want to keep an eye on. Pay attention to how the daily candles are forming. Pay attention to how often you see those big moves on a daily candle. Yeah, you're welcome anytime. You're welcome anytime. As mentioned, we might see price breaking out of this range, but it is important to have that volume. For example, now what we have a 30-minute candle breaking above this level. The 30-minute candle is closing in 7 minutes. When you drop down to the 50-minute time frame, we have 15-minute candle closing above this level, and pretty much this candle hasn't really done anything apart from just breaking above the high. The low hasn't been formed yet, so we might see a retracement on that 50-minute candle, and then it goes back into this consolidation zone. In a matter of fact, that would be good, because then it allows price to range within this level and then see that continuation or a retest of this hourly resistance during high volume time. Knowing that the weekly candle has just opened as well. No, to be honest, I don't trade Euro USD. To be honest, I don't trade any other currencies apart. I only focus on GJ and gold. I do believe in focusing on just maybe 1 to 2 pairs, as obviously as Raja always say, it's good to focus on just 2 pairs and then really focus on these 2 pairs. Watch them constantly. When you have time, look at how the daily candles closes. Even if you don't trade them, but just look at how the daily candles are forming, how price is reacting to certain levels. It allows you to understand when you're going to see volume, and also when you look at too many pairs, you start to get confused. Basically, Personally, I feel more comfortable with GBPJPY and XAUUSD because obviously I live in the UK, so I know a little bit about UK's economy. I follow what's going on in here, so it allows me to see what's going on. And obviously, I follow on the mainly focused on pound sterling, Japanese yen, and US dollar. And I think these are decent pairs. Also, these pairs do have a lot of volume, so you want to choose a pair that has decent volume, so you don't need to. So like your risk rewards will be much better, and you don't need to wait for too long. To let's say that it does have a good volatility basically. What pairs do you trade? Are you just like focused on GBP, GPY, XAUSD, and Euro USD, or is there anything else you look at? Yeah, fair enough. I mean, if you're just focusing on Euro USD, that's a good thing, because then you start to like see patterns in how you know that pair plays out, and that's actually really good that you just focusing on specifically on Euro USD. Having gold is good as well. The good benefit about gold is extremely volatile. So the return that you can do, let's say within a week or 2 weeks in Euro USD, you can easily hit that in gold within maybe 2 or 3 days, or even maybe within one session. Because sometimes if you're waiting for let's say a nice decent move, for example, I'll just give an example again on gold in here. For example, if you're patiently waiting for a decent buy for gold, you patiently wait in and you're waiting for price to close above this daily resistance. Now you're, instead of looking for small targets, yes, you're paying attention to how price will react to this daily high and this daily rejection formed back on Thursday last week. Now, not only focusing on that, but you're also focusing on how we have clean traffic on the left. Now, here's another confirmation as well. Let's say we have a daily candle closing bullish above this level. Yes, we do have this daily resistance on the left. This is something we can focus on. But once that daily close above this level, that doesn't mean we're going to see continuation to the upside. That could be a new high has been formed and then a potential resistance to be formed for price to pull back, form a new support, retest the high, and continue bullish. This is something that we've seen multiple times on a daily time frame on GJ actually. The close of the H30 30-minute time frame, candle above or below the no trade zone. For GJ, I noticed the first target is usually achieved has really helped. Yes. Yeah, you can clearly see how now the 30-minute candles coming to a close almost in 10 seconds. And you can see how the 30-minute candles retracing and potentially could be closing below this 30-minute resistance, which is below the area we were looking for potential buys. But again, even if I see continuation to the upside, even if I was looking for potential buys here at this moment, the one thing that will put me off is how this 15-minute candle formed. So here's how I look at it, okay? If this 15-minute candle closed bullish and we're looking for potential buys above this level, then why this 15-minute candle closed weak bearish with the rejection to the upside? Now that means there's something going on. So here, the problem we have here is a lack of volume. And that's where, I hesitate on looking for that entry basically. And that's why we refer to high volume time basically. So you mean we can use, let's have a look. So you mean we can use the 50-minute time frame candle as further confirmation for entry above and below the no trade zone? Yeah, like you want to pay attention to how price is forming, you know, because the thing is, like, the first thing we can do is look at how the 30-minute candle has formed. Now, knowing that the 50-minute candle closed weak bearish with the rejection to the upside and it hasn't formed the bottom wick, that tells me that we might not see that continuation to the upside. And the other thing I want to confirm as well, just because price will be closing bullish, or let's say we see continuation to the upside, knowing that we've had this weak 50-minute resistance, doesn't mean we didn't look at the price action the correct way. That means sometimes price can behave differently, you know. You might be correct 80% of the time. That 20% of the time could be against your favor, but I don't think you should change your, you know, like your tactic based on the 80% success rate. So in this case, what I see is an hourly candle still open. I can see an hourly resistance at this level and consolidation, and we can see hourly candle printing side by side. First thing I can think of is a new weekly candle has just opened. The Asian session hasn't even opened yet. I can see 30-minute candle closing above this level, but then when I investigate what has happened within the 50-minute time frame, I see a 15-minute resistance, weak candle closing bearish. And now let's have a look. So this is 12 pip range. I mean, personally, I wouldn't look at this as a confirmation. I would look at it as if a market is telling you to wait for high volume time. And even if you miss it, just look at, you know, a next potential of a continuation to that upside during the pre-London session or London session. You always have multiple sessions. But yeah, and that's one of the reasons why I start doing the analysis starting from the Asian session. Because what I look at is when the daily candle closed, when a new daily candle starts to open, that's when you need to start to anticipate what you could see in the market. So for example, you know, I've been doing this for almost 4 years, I'd say, and seeing these kind of, you know, move happening over and over, it allows me to adjust these no trade zone accordingly. And just because of prices breaking out of my range doesn't mean I'm missing out on anything, because I'm still respecting what's going on in here. And again, I've mentioned recently, you might see that break to the upside, and then the following could be just a rejection. But then the other thing that you might see is you might see candle closing above this no trade zone, and then price still continues bullish, but it will be in like an extremely slow level. You know, for example, this is roughly a 45 pip range. During high volume time, this could be easily achieved within 1 hour candle, easily. But what you don't want to is, you don't want to be sticking for 3 hours for price to tap this hourly resistance for 3 hours, where you can easily do that within a 30-minute candle during high volume time. So you really have to scale those things. Yeah, I agree. Like, you know, I don't really look to execute on the low time frame unless if we've had a lot of volume. And sometimes I actually look for execution on gold on low time frame, such as the 50-minute time frame. But that's when we have an extreme volatile moves. For example, let's say, for example, looking at the let's go back on gold quickly. There's no way, in my opinion, you could catch, let's go back again. We've had this strong bullish momentum. There's no way you could catch a trade within this 30-minute candle here on gold. In order to do that, you have to break down, like, you know, drop down to the 50-minute time frame, or even the 5-minute time frame, because just the 1 minute candle could be, for example, let's have a look at this one. That is 118 pip range, yeah. And then let's drop down to the 50-minute time frame. Just one candle, 92 pip range on a 50-minute time frame. So for example, let's say you were looking for continuation to the downside. Would your stop loss be 60 pip range? That's huge. If you were looking for, scalping, the max you want to have is maybe 30 pips, or maybe you want to reduce on your risk. So if you was going for a one lot, maybe you want to go half, and maybe you want to keep that same stop loss in here. Or what you can do is drop down to the 5-minute time frame, and then try to wait for that 5-minute to line up with the break of the 30-minute candle. It is a bit confusing to explain it that way, but if something shows up, then I would demonstrate that really well. For example, let's say, let me go back on GJ. So for example, let's say the hourly candle, we have, for example, let's say the candle, the previous 30-minute candle would be all the way down to 180 level, and that's a big stop loss to have in here. What I can do, instead of having, okay, we're just gonna have it based on the hourly. Okay, so let's say I was looking for potential buys. If I was gonna put my stop loss at 180 to 30, instead of having it here, what I can do is I can compromise on my stop loss, and I can adjust it based on once this 30-minute candle break the high, then I can have my stop loss at this level and anticipate for price to continue bullish, knowing I have a confirmation for candle closing above this level. So the only thing I'm having here is that continuation to the upside. So if price is going to break below this level, then my trade will become invalid. Now, when we're looking at gold, for example, candles are extremely wild sometimes. So sometimes I look at, let's say, 5-minute time frame. So if that 5 minutes is a 30 pip range, then I might have my 5-minute stop above, for example, let's say I have a 5-minute candle closing here, 5-minute candle closing here, and then you think you're missing out on a trade, but no, not really, because what you're doing is here, you allowed the 30-minute candle to form a low, and I hope that makes sense. But I can only demonstrate it when I see these kind of volumes. So let's say I have my stop loss here. That's a big range for gold. But then once you wait for, when it dropped down to the 5-minute time frame, you might see within that rejection or within that wick to the upside, you might see some sort of a price action on the 5-minute time frame. So now when it dropped down to the 5-minute time frame, what do we see? We have a 5-minute resistance formed around 180.530. So here's how I would look at it. So within this 30-minute candle, as price break above this high, knowing price is breaking above this 5-minute resistance, my stop loss is going to be within that current 5-minute candle, knowing that we're going to continue bullish. Because at least if price is going to stop me, it's only going to stop me within this level instead of having a big stop loss, basically. I know this might sound a little bit confusing. I know some people might not agree with it, but I only look at these kind of confirmation based on when we can see a lot of volume in the market. Is it formed homework confirmation for sales in 15-minute gold? Let's have a look on gold. So looking at the gold, are you sure you're talking about gold, or do you mean GJ? As if gold is just ranging, to be honest. You can clearly see we've had those hourly candles printing side by side. The probability for price to continue consolidating here is still is high, but not really. I mean, that's just a range, really. You can clearly see when you measure the 50-minute candle, that's roughly around 17 pip range. It's no wait. Ideally, is to wait for price to break out of this range. As of GJ, you can see how price is now retracing, knowing that we're approaching the hourly close and the Asian Open. You can clearly see how price is retracing and potentially respecting this hourly resistance formed on the left. Now again, as we explained earlier, for price to continue bullish, that doesn't mean that was a continuation to the upside. That was simply price forming a range for the new weekly candle. No, we're not. Asian Open, it's in 16 minutes. It's Asian Open in the UK, it's 1 a.m. in the morning. Yeah, so UK time for Asian Open, it's 1 a.m. Yeah, Drew, anytime. We would be happy to have you again anytime. Good questions. Any questions is always good to keep the live stream going. Sharing ideas as well. I would like to see people, asking questions. For example, why didn't you have, let's say, for example, a target at a certain level? Is good to challenge me as well, because then it's an eye opening for me as well. So it's good to have your own analysis and ask and say, how come this is not as a no trade zone? How come we can't expand our no trade zone? Those questions are really, really important. So sharing information is really good. And you're welcome. You're welcome. If these live streams become, if we have more people joining in, I would say I would happily do it daily at the pre-Asian session, and we can prepare for the next daily candle. We can look at the charts, we can do everything. We just need more people to join in, and that would be great to to discuss more trade ideas. Yes, that would be really good, because then it allows people to ask questions, because there might be some people who do not make any analysis at all. And I would say, if you really want to take trading seriously, it is extremely important to do the analysis. It doesn't matter whether it looks not nice, whether it looks messy, if you think it's not good enough. This is not the way you approach it. You have to approach those kind of in order to improve yourself, you don't have to be good at it. You can just start with one idea, for example, with a question, or start to have your own targets. For example, let's say you've got your day job and you can't trade during the day. Just write on a piece of paper, or just on your MT5 on your MT5 on Dominion markets. Just put a line. For example, you have a target, put a line at that target, and just go back later on and see. Or even just don't look at it the whole day. When you finish work, go back on your chart, go back on your MT5 or C Trader, and look on the line that you've had, whether it has been tapped or not. That's how we can start to build that confidence. So at least now we have, like, how do I put it? So by doing those analyses, you're starting to like form an idea where price is going. Because you've done the analysis, you can always look back on these analyses and say, okay, you know what? These are my own analysis. Price tapped exactly to where I expected it to go. And you keep doing it every single day. And then eventually you become really, really confident. And then your trade, and then for example, let's say one time price didn't tap into the level where you were expecting, then you could always drop it down. That doesn't mean your target didn't make sense. You'll find out that that means price was just ranging. You know, sometimes, you know, I was having really good analysis and I'm looking why price is not tapping into my, let's say, TB for buys. Doesn't make sense. Why? I'm like, I'm just looking at it. And then when you go back on the daily and starts to look at it on the wider point of view, you start to see it's nothing to do with the analysis, but to do with the volume. Then you look at the 4-hour time frame, 4 hours ranging, a daily's closing week bullish with the rejection to the upside. Now you start to think, okay, so that's nothing to do with my analysis. Now that must be something coming up. So that might be an FOMC, an NFP, CPI, could be retail sales, it could be anything. So always have the analysis ready. Now I'm just going to stay on the live stream for, I'd say, probably for 5 more minutes, and after that we will end it. So if you do have any questions, it would be good to ask them now. So if a candle has no wick on the bottom, and if it's going up from the bottom of the chart, is it like a trap? If you go to the 5-minute time frame, there is a there on the bottom of the chart. Welcome back again. I don't really know what you mean here, but 5-minute time frame is not a strong confirmation. You know, 5-minute is just price ranging for the 30-minute candle to break out of the range. So I wouldn't really look at it. Can you be a little bit more specific? Are we talking about GJ or are we talking about gold? Let's have a look. If you're talking about GJ, I wouldn't really look at this as a confirmation, because just imagine if you were looking for buys in this level, you can see price would have only moved what 7 pip range and then starts to retrace, and you're hoping for price to continue bullish, and then it doesn't. 5-minute time frame is not a strong confirmation at all, so I would highly advise, recommend, suggest not to look at those time frames. But again, this is for education only. I'm just trying to give my own explanation to how I view the time frames and how I look for targets and that. Yeah. Talking about gold. Say again the question. No, not really. To be honest, not really. No. Price is literally just ranging on gold. You know, you can clearly see. You know, when I start to see something interesting, yeah, like let's say if I had a 30-minute candle closing above this level, then that's when I start to look for, buys. But other than that, I really don't pay attention to on gold on the 5-minute time frame. The only time I do, as mentioned earlier, is when there is high volume time. For example, if one candle, for example, I'll give you an example. Okay, so this is one 30-minute candle moved 116 pip range. Okay, now when it dropped down to the 30-minute time frame, look, that moved swiftly. Let's have a look on 50. Even to be honest, it would have been really hard to catch it. I'm not gonna lie. Unless if even on a 5-minute time frame, I mean, this is just one of them moves where you'll just miss it. or you take an impulse entry. So 5 minute is unreliable. In my screen, I can see no candle that's got. If you're talking about this one without bottom wick, if you're talking about this one, I don't think is a confirmation. I think it's just price ranging, because even when it dropped down to the 1 hour time frame, you just can't rely on these time frames. I wouldn't. I would just treat this as a no trade zone, and I would patiently wait for price to break out of this range, I would say. Because, you know, when you start to look at the low time frame so much, that's when you start to lose what you're looking for, whether it is a buy or a sell. You see, I know what you mean. So like you see 5 minute candle closing with no wick to the bottom, and you see that as a confirmation. Just imagine if you took a trade based on that confirmation. Price doesn't like it wouldn't really make sense. I personally, this is how I view it. Yeah, like this might have seemed like what 20 pip range, but then would that have made sense to you on the 50-minute time frame? Now, when we've had these weak volume candles, would that have made sense for you on the 30-minute time frame? Because you trade in the range. That wouldn't have made sense on the hourly either, because candles are printing side by side. So I wouldn't look at it as a confirmation. And now you can see. Oh, okay. No. I was asking if that's a trap. No. Like I wouldn't say it's a trap, because low time frames, I don't really look at that as a trap or anything, you know. But yeah, you can see how the GG is actually retracing now, and that's really interesting. And that's why I didn't like how this 15-minute candle closed weak bearish with the rejection to the upside. Didn't make sense for this candle to close the way it did, because if price was going to continue bullish, then we would have had another 15-minute candle closing bullish. That's how I view it. And also the 30-minute candle has already broke below the previous one as well. Okay guys, so thank you for joining the live stream today. It's been a pleasure talking to everybody. It's been really good with questions today, so it seems like we are seeing an improvement. Our next live stream would be on Thursday, and that would be at the pre-Asian session. So we're talking 11 p.m. GMT, and that would be 5 p.m. Eastern time. So thank you again for joining us, and I hope you have a nice day.